Misuse of tax deduction claims, a case study of 90,000 salaried individuals. In January 2025, the Deccan Herald reported a startling revelation about 90,000 salaried individuals in India who withdrew a staggering 1,070 crore rupees through wrongful tax deduction claims. This incident highlights the vulnerabilities in India's tax system and raises questions about the ethical responsibilities of taxpayers, the adequacy of checks by authorities, and the broader implications for the economy. The reported 1,070 crore rupees withdrawn under dubious tax deduction claims reflects a coordinated effort by individuals to exploit loopholes in the system. Such tax deductions are often related to investments in specified schemes, home loan interest payments, or medical and educational expenses. While these provisions are intended to provide genuine financial relief, this case exposes how they can be misused. The individuals involved provided fabricated documents or manipulated figures to inflate their claims. Tax authorities discovered the irregularities during a systematic audit, prompting investigations and recovery measures. This incident sheds light on a systemic issue that extends beyond individual misconduct, underscoring weaknesses in the verification processes and enforcement mechanisms within India's tax regime. The incident raises significant ethical concerns. Taxation is a fundamental aspect of governance, enabling the state to fund public services and infrastructure. By evading taxes through wrongful claims, individuals undermine the social contract, shifting the financial burden onto honest taxpayers. From a legal perspective, the misuse of tax deductions is a violation of the Income Tax Act, 1961, and can attract penalties, interest on unpaid taxes, and even prosecution in severe cases. The law empowers tax authorities to conduct audits and impose fines, but such incidents reveal gaps in enforcement. Several factors contribute to the recurrence of tax fraud in India. Inadequate scrutiny. The tax department faces challenges in verifying the authenticity of every claim due to the sheer volume of returns filed annually. Complex tax codes. India's tax system is complex, with numerous exemptions, deductions, and rebates, creating opportunities for exploitation. Limited use of technology. While digitization has improved efficiency, the integration of artificial intelligence and data analytics in tax enforcement remains insufficient. Lack of awareness. Many individuals, particularly in the salaried class, lack awareness of the legal repercussions of fraudulent claims, treating them as minor infractions. The financial implications of such fraud are profound. Every rupee lost to tax evasion reduces the government's ability to invest in public welfare schemes, infrastructure, and other developmental projects. It also affects India's fiscal deficit and can lead to increased taxation pressures on honest citizens. Moreover, incidents like this tarnish India's image as a compliant and transparent economy. For a nation aspiring to attract foreign investment and strengthen its global economic standing, such revelations can be a deterrent. Addressing the issue requires a multi-pronged approach. Strengthening tax scrutiny. The government must enhance its audit capabilities, employing advanced technologies like artificial intelligence and blockchain to detect and prevent fraud. Simplifying tax laws. Reducing the complexity of tax codes can minimize opportunities for exploitation while encouraging voluntary compliance. Increasing awareness. Educating taxpayers about the ethical and legal responsibilities of tax compliance can reduce fraudulent practices. Stricter penalties. Imposing stringent penalties and ensuring swift prosecution for offenders can act as a deterrent. Collaboration. Greater coordination between banks, financial institutions, and tax authorities can improve the accuracy of claim verification. The 1,070 crore rupees tax fraud by 90,000 salaried individuals serves as a wake-up call for India to reassess its tax administration system. While the government must strengthen enforcement mechanisms, taxpayers must also acknowledge their role in sustaining the nation's economy. Ensuring transparency and compliance is not just a legal obligation but a moral imperative for fostering equitable growth and social justice.